G'day and kia ora everyone. My name is Sanjeev and welcome to the Engineered Investments channel. At the end of this video, you would have gained objective insights into Macquarie Group, an investment bank listed on the Australian Stock Exchange. I'll quickly mention that episode 1 should be watched prior to this one as it goes into detail in explaining the three-stage evaluation process used in this video. Looking at the establishment metrics, Macquarie Group was established in 1969 or 52 years ago, initially as a wholly owned subsidiary of UK's merchant bank Hill Samuel and Co Limited, before becoming an Australian bank in 1985. Here's a fun fact. According to the website, Macquarie Group have 52 years of unbroken profitability. Today, they provide a diversified range of products and services which they separate into four business units: business banking, asset management, capital solutions, and commodities. These services are predominantly provided into the institutional, resources, government, real estate, and retail markets. They employ roughly 16,000 employees in 32 countries, including regions in Europe, Americas, Africa, Asia, and of course Australia and New Zealand. They currently rank 7 out of the 2,200 plus companies on the Australian Stock Exchange. Jumping into the financial metrics, dividends have been paid continuously over the last 5 years, with the 2021 total dividends coming in at $4.70, up by 40 cents per share from the previous year. The share price has grown 130.9% over the last 5 years. If you had purchased shares in October 2016 for $77.10, as of September 2021, your share price would have increased by this percentage to $178.01. The operating income increased from the previous year by $449 million to $12.774 billion. From the annual report, the increase was achieved by strong growth from the commodities business, posting a 50% increase in income. The banking business grew, however, posted the same income from the previous year. This was due to an increase in headcount and technology costs to support that growth. The asset management business was down by 5% due to the divestments of underperforming joint ventures. The capital business was down by 15% as they had less assets to generate money from compared to the previous year. In saying this, the CEO highlighted that the company's diversified business structure allows their four business units to contribute in different income cycles. The operating expenses had effectively a flatline change in 2021 versus 2020, coming in at $8.867 billion. Effectively, they increased operating income whilst keeping the expenses under tight control. Net profit had increased by $284 million from the last year to reach $3.015 billion, which appears to be a positive trajectory when comparing the historical net profits. Ratio metrics. Measuring the banking side of the business, the return on assets ratio remained stable at 1.2, a very good indicator that the assets are being put to good use to generate earnings. When comparing to the big four banks, this is a very good ratio for a banking outfit. On the non-banking side of the business, the return on equity ratio has remained above 10%, indicating healthy profits are being maintained from the assets owned. The non-interest to operating income ratio has reduced to a more balanced value of 78.8, down by 8.8, suggesting that the operating incomes of the business units are contributing more proportionally than in the previous year. Because Macquarie Group are an international diversified group, which includes banking, we'll look at the home to outside comparison. We're seeking to gauge the net profit made in their home market, which of course is Australia and New Zealand, versus everywhere else, as our home market is extremely robust in comparison to the rest of the world. As of 2021, 32% of net profits were made in our own backyard, holding a stable position from the previous year. Investment home loans increased by 1% according to APA statistics, suggesting that the banking side of the business has increased in the local market. So what's the outlook? Well, Macquarie Group rely on cyclic performance of their business units to generate increased net profits. This year, two business units did not record an increase in profits. However, the remaining two business units covered the gap to record a positive profit performance. The company is untangling themselves from joint ventures and making more cautious decisions on upcoming funding and liquid positions to adapt to the change in market conditions, which of course is an expected stance considering the economies they play in are in various states of economic recovery. In summary, dividends have been continuously paid over the last 5 years, and the share price has shown strong growth during the same time frame at 130.9%. The financial metrics have shown an increase in net profits to just over 3 billion, with a $449 million increase in operating income when compared to the previous year, all whilst holding the operating expenses stable. The ratio metrics are suggesting a stable operation through diversity of operations, including strong home market business competence. These characteristics typically signal a high potential for stock investment. This brings us to the end of the video. Please do like and subscribe. Thank you for watching. See you next time. Ka kite ano.